Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Everyone has a view on the housing market, from Reserve Bank Governor Michelle Bullock through to economists and homeowners. Of course, we know interest rates are relatively high and house prices certainly have bottomed. They bottomed last year, in fact. But since then, there's been quite a remarkable turnaround. Domain last week released its September quarter house price report. So I thought it would be a good time to check in on what we're likely to see over the next 12 months or so. Dr. Nicola Powell is Domain's Chief of Research and Economics. Welcome back to Fear and Greed, Nicola.
Thank you for having me on again.
So what's the September quarter house price report showing?
Look, I think it's probably going to quite surprise listeners, but we are almost fully recovered from the 2022 downturn. When you look at where house and unit prices are sitting now compared to their respective peaks across the combined capitals, we only need $2,000 for house prices and $5,000 extra for unit prices to be at a new record high. And, we are actually of the view by the end of this calendar year, we are likely to achieve that across our combined capitals.
I think that's quite extraordinary because we may even have another rate rise in the offing next week when the Reserve Bank meets. Why are we seeing this incredible bounce given the economic circumstances?
I think it is surprising given that inflation is stubbornly high and we've seen such a change in the cost of actually holding debt and that impact on borrowing capacity. We've seen borrowing capacities slashed by 30% based upon how high interest rates have gone over the last 12 to 18 months. Look, I think that there is a variety of different reasons why we've seen our markets recover, and that initially commenced because of a lack of supply. And we saw, particularly in Sydney, move into a recovery much sooner than our other capital cities. And that was because sellers sat on the sideline. And this is what I love about our housing markets, that behavioural economic side, where there is this emotional aspect that isn't spoken enough about in the housing market. And that is, you are not going to sell your biggest asset if you think that conditions do not suit selling, or you think you're not going to get the price that you think your home is worth. And that's what we see during all downturns is sellers pull back, and that in itself helps to stabilize price. And then you eventually start to get increased competition, and that starts to drive prices up. And that is exactly what we saw earlier this year. And I would probably say that we saw a bit of a stronger pullback from sellers than what we would tend to see during a downturn. And so I think actually that movement into recovery was pretty quick. But there's other things too. There's things like population rebounding quicker than anticipated, higher construction costs, which feed into higher home prices. And we've also got, which has got a lot of publicity around, is a tight rental market. We've got Australia's vacancy rate at 0.8%. That is a record low. So all of these things together, I think, are helping to drive pricing up, even on the backdrop of higher interest rates and high levels of inflation.
Okay, so looking into the crystal ball, what about the next 12 months? You've just explained what's happened now. Is there more supply in the market? Where do you think we're going?
There is absolutely more supply in the market. And, I actually think conditions are improving for buyers because choice has risen. And you can kind of see that coming out in clearance rates where buyers, a little bit of that fear has gone in terms of they know that there are fresh listings coming on. We're starting to see total supply build up. And what was very evident this quarter, prices are rising, but I will stress that the pace of growth has now moderated. So what we're expecting over the next 12 months is prices are likely to rise, but at a much more subdued rate. And I am expecting that some of our capitals are likely to go sideways. And that's exactly what we've seen coming out of Melbourne. Melbourne prices pretty much for the last 12 months have been bobbing around a price trough. They nudged marginally higher. But, when in a market like Melbourne, a major capital city, can you actually purchase at a price trough? It's a very balanced market at the moment. We're seeing that come out in clearance rates. We're seeing that come out with sideways movement in pricing. So long and short, I do think that we are likely to see prices rise, but at a much more moderate pace. And some of our cities will go sideways.
Okay, so let's stick with Melbourne. I know in the report it showed that Melbourne's now the second most expensive city in which to purchase a unit. Behind Sydney, overtook Canberra, which it had been behind for a year or so. Units in Melbourne, they seem to be doing okay.
They do. I actually think this is probably the curveball for Melbourne in terms of unit prices have seen the strongest 6 months in terms of price growth since the latter half of 2019. So units are outperforming house prices. Units rose 5 times faster than house prices over the September quarter. And actually, they're just over halfway into a recovery. When you compare that to where a Melbourne house price is sitting in terms of its recovery, they have only recouped 1/7 of what was lost during the downturn. So I think this speaks to probably where demand is coming from. It speaks to affordability issues. And, some of our capital cities are actually seeing unit prices outperform house prices. And I think that speaks volumes for affordability barriers.
Stay with me, Nicola. We'll be back in a minute. My guest today is Dr. Nicola Powell, Domain's Chief of Research and Economics. One of the things I noticed in the report, in Melbourne and Canberra and Adelaide and Brisbane, I think, a unit costs about 55 to 60% of the cost of a house. This is median cost we're talking, whereas Sydney, I think, was 49% or something or other like that. Why are units relatively cheap, and I say relatively there, in Sydney compared to other cities?
It's extraordinary, actually. When you look at the price gap between houses and units, Sydney and Hobart are the only two cities with a record price gap. And, as you said, a house in Sydney is twice the price of a unit. What does this tell us? I do think it speaks to probably back to what we saw during the pandemic, where we saw such an overperformance of house prices. And, while we saw a bigger dip in house prices, during the downturn last year, it's almost recouped that, and that record price gap is there again. So, it is surprising because Sydney is actually probably is the most unaffordable capital city out of all of our cities. So in a sense, you would say that unit prices offer that affordable alternative. I think units are probably at this moment in time undervalued when you do that comparison to house prices in a market like Sydney. And I have to say, it's not very often I get surprised by property data, but I was actually quite surprised that Sydney is yet again got a record price gap, because I really anticipated that to narrow, and it hasn't.
What about Canberra? Why is Canberra so expensive, Nicola?
Look, I think Canberra has seen a phenomenal period. It saw the largest upswing that he has ever experienced. I think the value for money, while it is expensive, what you get in Canberra relative to other cities is bigger. You get a larger plot of land. I think your money goes further in terms of what you're actually purchasing. I mean, if you bought like for like in terms of the dollar value in Sydney, it would look very different, and the same for Melbourne and probably many of our other capital cities as well. I think Canberra saw a phenomenal boom. It also did see the steepest downturn the city has ever seen, and it took a while to move into a recovery compared to our other capital cities. But I largely think it's the lifestyle that Canberra offers. I do think there is an element, dare I say it, that Canberra was, in fact, Australia's best kept secret, because it is so...
Hold on, Nicola. Where do you live?
I do live in Canberra.
Oh, right. Just pointing that out to listeners. Just best kept secret. Go on.
Yeah, it is. It allows you to have that balance if you have a young family. But I do think that what we saw was an extraordinary pace of growth.
Okay, so we've talked about Canberra, we've talked about Sydney, Melbourne. We better talk about Brisbane and Adelaide. I always find those markets kind of fascinating, because I've never lived in either of those two cities, but you can see some real outliers when it comes to clearance rates, for example, or even just individual sales. They seem to be almost more volatile over the longer term than the other cities, but maybe I'm making that up.
I'm not sure if Adelaide quite fits that, because Adelaide has always been known as that quiet achiever, and it was the best performing capital city over the September quarter. And it's actually Australia's only capital city to have a record high house and unit prices. It's also had a really strong auction market. We've continued to see some of the best auction clearance rates coming out of Adelaide. And so that quiet achiever title for Adelaide, really, it's kind of continues to defy that. And, it's one of those markets that continues to see record pricing. Brisbane's an interesting one because I actually think what's quite remarkable, and I will use that word for Brisbane, is that unit prices are at a record high in Brisbane. And it wasn't that long ago we had a massive oversupply of units due to high levels of development across Brisbane. And I always wondered what point in time will we actually see that market balance out and, the rental prices start to rise and also unit prices rise. We've got that. It's the first time ever units in Brisbane have outperformed house prices for 6 consecutive quarters. We've never seen that. And it's dropped the price gap between property types to a 2-year low. So great for anyone looking to make that leap between property types.
And just quickly, we're running out of time, but better mention Perth and Hobart. Hobart seems to be struggling still.
Yeah, look, it is. And Hobart was one of those markets that was, along with Canberra, and there's actually lots of similarities between the Canberra and Hobart market. They were both the last ones to bottom out. It's only recouped about 17,000 of the 64,000 that was lost, so about 1 quarter into recovery. The drain on Hobart, though, is interstate migration is at a loss. So it's losing more people to other states and territories that it's gaining. And that's actually the same for the ACT. And I always think that when you see that coming out in terms of those shifts in demographics, you also then tend to see a softer housing market also.
Okay. And Perth?
Yeah, Perth is also one of Australia's better performing capital cities. And I think Perth, again, it's these demographic trends that are supporting positive growth, continually positive growth in Perth's housing market. House prices that are record high. It's got positive net interstate migration, and normally into WA it's negative. And we've got record levels of overseas migration, and particularly so in Perth, a chronic undersupply of housing. Total supply of homes on the market in Perth is 39% below the 5-year average for this time of year.
Wow. Nicola, thanks for coming on to Fear and Greed.
Thanks for having me.
That was Dr. Nicola Powell, Domain's Chief of Research and Economics. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.